Welcome in, everyone. Today we're doing a deep dive into Tokyo Electron.
Tokyo Electron.
They're fascinating, right?
Yeah.
They're the only company making products for all four, get this, all four key processes in making semiconductors.
Wow. That's kind of a big deal.
That IS a big deal.
Yeah.
And we're really lucky because we've got their 2024 integrated report, which is packed with info about their business.
Oh, is it?
Yeah, their financials and all their sustainability stuff, too.
It really is. It's a really fascinating look
Yeah.
into how they operate.
Yeah.
And, you know, we talk a lot about transparency, and this report really does lay it all out. Their operations, the challenges, their vision for the future. It's really accessible.
So, okay, we know they've got these four main segments, right? Deposition, coder-developer, etch, and cleaning.
Right.
These are like the fundamental building blocks
Yeah.
of every single chip
Yeah.
that powers our world. But what I think is really interesting is how they're thinking about their market, right?
Yeah, it's really interesting because they're not just looking at semiconductors broadly.
Right.
They've really kind of zeroed in on what they call the magic sectors.
Magic.
Yeah.
What is magic?
So that's metaverse, autonomous mobility, green energy,
Right.
IoT, you know, Internet of Things and information and communications.
Got it.
And so these are like the areas they see as, you know, real game changers, the future of tech.
The future.
And they're really positioning themselves to be right at the heart of that.
So they're not just like riding the wave.
Yeah.
They're building the
We're
surfboard.
building the surfboard, yeah.
I like that. I like that analogy.
Right.
But it's not just about, selling new equipment.
Right.
They're also hugely invested in what they call the aftermarket.
Yeah, the aftermarket.
The aftermarket.
Which is a huge part of their business.
What does that even mean?
So they've got, something like 92,000 units of equipment already out there in the field.
Wow.
And they're actually preparing for a future where they've got over 100,000.
Wow.
So think about that. Maintaining those machines, upgrading them, that's critical for the customers. And it translates into a very steady revenue stream.
Right, because those machines have got to keep running.
They have to keep running
Yeah.
to make the chips.
It's almost like they're saying, we're not just selling you the machine.
Right.
We're your partner
Absolutely.
in making sure it keeps working.
It's a long-term game.
Yeah.
It's a partnership.
Totally. And that partnership extends to R&D too, right?
Absolutely.
Research and development.
Huge investment in R&D, collaborating with their customers, leading industry consortiums to really kind of push the boundaries in things like 3D integration technology.
Okay, break that down for me. What does that mean?
So imagine you're building a skyscraper, but instead of using steel and concrete, you're using layers of material that are just a few atoms thick.
I can't even picture that.
It's mind-blowing.
It's tiny.
Yeah.
Okay, so they're like deeply embedded
Yeah,
in the whole ecosystem,
absolutely.
pushing the limits.
Yeah.
But are they making any money?
Well, let's talk numbers.
Okay, let's talk numbers.
Their net sales for fiscal year 2024 came in at $1,830.5 billion.
Okay.
Now, that's actually a little bit down from the previous year.
A little down.
Yeah.
Aye.
But here's the thing. Their operating margin
Yeah.
sits at a very impressive 24.9%.
Hold on. So sales are down, but their operating margin is huge.
It is. And you know why?
Why?
Because they're playing the long game.
Okay.
They pumped $202.8 billion into research and development.
Wow.
They're setting themselves up for future growth.
Yeah.
And they're very clearly focused on offering high-value products that command a premium price. They're not afraid to invest in their future, even if it means a little dip in revenue in the short term.
They're not chasing those quick bucks.
No.
What about cash flow, though?
Well, their cash flow from operating activities is a very healthy $434.7 billion.
Okay.
Now, you'll notice, if you look at the numbers, there's an increase in their inventory.
Right.
But that's not a bad thing in this case.
Really?
No, they're actually anticipating
Okay.
future market growth.
That's smart.
And they're making sure they've got the resources to meet that demand.
So it's not like they've got a warehouse full of
No.
dusty old gadgets.
This is strategic.
Yeah.
This is planning ahead.
They're ready.
Exactly. And let's not forget the return on equity, that ROE, 21.8%.
Whoa.
That's telling us they're making very smart decisions with their capital.
Yeah.
They're generating a strong return.
So we've got a company that's financially strong.
Yeah,
They're strategic.
absolutely.
They're innovative, But what about the investors?
Right?
Are they keeping their shareholders happy?
They are big believers in sharing the wealth,
Okay, how? How are they doing that?
primarily through a really solid dividend, and they've got flexible share buybacks as well.
Okay.
In fact, their dividend payout ratio for 2024, 45%,
45%.
meaning they're returning almost half
That's a lot.
of their profits
Right.
back to the shareholders.
Okay, and what about those buybacks?
So they've got a flexible approach to buybacks. They repurchased 40 billion worth of shares last year.
Wow.
And they've got authorization to buy back up to 100 billion over the next 2 years.
Okay.
So by buying back those shares, they're essentially reducing
Yeah.
the number of shares that are out there,
Right.
which can increase the value.
Makes sense. So it's like they're saying, we believe in this company
That's right.
so much that we're buying it ourselves.
That's exactly the signal they're sending
Yeah.
to investors.
So we've talked about their business,
Yeah.
their financials,
Uh-huh.
shareholder value.
Yeah.
They seem to be doing well in all these areas.
They are firing on all cylinders,
Yeah.
it seems.
I'm curious, though, to dive a little deeper
Right.
into those individual business segments.
Okay.
What trends are they seeing?
Yeah.
What are the growth strategies, the challenges within each of those areas?
It's a great question, and it's exactly where I think we should head next.
Awesome.
Let's roll up our sleeves
Well, I'm ready.
and get granular
Let's do it.
with those segments.
Let's dive in. Okay, let's get into these business segments. We touched on them earlier, but now we're going deep. Trends, growth strategies, challenges. What's the story in each of these core areas? Where do we even start?
Well, we could start with deposition.
Okay, deposition.
It's one of the most fundamental processes in chip manufacturing.
Right.
Essentially, it's about laying down these incredibly thin layers of material onto the silicon wafers.
Okay.
Think of it like building a microscopic layer cake.
Okay.
But the layers are, just a few atoms thick.
Wow, that's thin.
And Tokyo Electron is a real dominant player in this space.
So precision is key here, right?
Mm.
What are some of the trends that are shaping innovation in this segment?
Well, the big one is that constant drive
No.
for smaller, more powerful chips.
Right.
So you need those deposited layers
Right.
to be incredibly thin and uniform
Yeah.
with, atomic level precision.
So it's not just slapping on a layer of something.
Yeah.
This is a very controlled, very precise.
It demands incredible innovation in material science, process engineering, equipment design.
Right.
And Tokyo Electron is investing a lot in all those areas,
Yeah.
pushing those boundaries.
So you mentioned the 3D NAND flash memory earlier.
Right.
Is that an example of this kind of innovation?
It is,
Yeah.
yeah. In 3D NAND, those memory cells are stacked vertically.
Vertically.
It's like a high-rise building
Okay.
for data.
Wow.
So this allows for much, much higher storage capacity in a smaller space.
That makes sense.
And Tokyo Electron's deposition technologies are essential for creating those intricate 3D structures.
Okay, so they're not just making chips smaller.
Right.
They're finding new ways to actually build them.
Exactly.
That's cool.
Okay.
Okay, let's move on. What about the coder developer business? What's going on there?
So this segment is all about photoresist,
Photoresist.
which is a light-sensitive material used in lithography.
Lithography.
Which is basically, like a microscopic projector creating the circuit patterns
Yeah, right.
on a chip.
Got it.
The photoresist acts like a mask, protecting certain areas of the wafer
Uh-huh.
during the etching process.
So Tokyo Electron's equipment makes sure that photoresist is
Applied evenly,
applied evenly.
developed precisely,
Yeah.
essential for creating those tiny, complex features.
So just like deposition,
Yeah,
precision,
absolutely.
control, those are paramount.
And one of the biggest challenges they're facing in this segment
Yeah.
is keeping up with shrinking feature sizes.
Right, because as those chips get smaller,
Yeah.
it just gets harder.
The patterns get more intricate,
Yeah.
and that demands even greater precision
Right.
in that photoresist process.
And then there's that move to EUV lithography, right?
Yeah.
Extreme ultraviolet, that's been a big
game changer.
It's a whole different thing, right?
EUV is a different wavelength of light.
Yeah.
It requires completely new materials and new equipment.
So how are they handling that transition?
Well, they're right on the front lines,
Good.
developing those new coder developer solutions.
Okay.
Specifically for EUV, they know that adapting to these shifts is going to be key.
Right.
Staying competitive.
Okay, so we've got depositions laying down the foundation.
Yes.
Coder developer setting the stage
Uh-huh.
for those patterns.
Right.
And now we get to the actual etching.
Exactly.
This is where it gets interesting.
This is where we carve out those microscopic features on the wafer, selectively removing material, right, to create the circuitry.
That's like sculpting.
It's like sculpting on an atomic scale.
Wow.
And Tokyo Electron offers a whole range of etching technologies.
I was reading about dry etching and wet etching.
Right.
What's the difference?
So dry etching uses plasma
Okay.
to remove the material.
Uh-huh.
Wet etching uses chemical solutions.
Got it.
Tokyo Electron's a leader in both.
So they're hedging their bets.
Well, they're constantly pushing
Yeah.
for greater precision,
Right.
greater control,
Yeah.
always on the lookout for new techniques, new plasma sources, new ways to control the process.
At the atomic level.
At the atomic level, yeah.
It's incredible. And I imagine they're keeping an eye on new materials too, right?
Oh, absolutely.
Like those TMDCs we talked about earlier.
Yeah.
Those could change everything.
They could pave the way for even smaller, more powerful chips.
So it's not just about building the equipment.
No.
They're really partnering.
They're working with the chip makers to drive the entire industry forward.
They're really part of that innovation.
They get it.
Yeah.
They understand that innovation in etching
Yeah.
is essential for the future.
All right, so we've covered deposition, coder developer, etching,
Cleaning.
cleaning.
Right.
Right, of course. I mean, it might not sound as exciting as the other stuff,
It may not be glamorous,
but it's got to be important, right?
it is absolutely critical.
I mean, you can't create a good chip if it's covered in dust.
No, you can't.
So cleaning is all about making sure those wafers are pristine
Pristine, yeah.
throughout the whole process.
Throughout the whole manufacturing process. And as those chips get more complex,
Yeah.
the features get smaller. Even the tiniest particles
Right.
can cause defects.
So what are they doing about that?
Well, they're developing new cleaning technologies that are not only more effective, but they're more sustainable as well.
Sustainable how?
Less water, fewer chemicals.
Oh, okay. So they're even thinking about the environment,
Absolutely.
even in cleaning. It's fascinating how every single one of these segments
Right.
is connected to how semiconductors are evolving.
It really speaks to their deep understanding
Yeah.
of the tech
Yeah.
and their commitment
Yeah.
to staying ahead of the curve.
Absolutely. Now, you mentioned financials earlier.
Yeah.
We talked about their margin and their ROE. But what are some of the other highlights from their financial statements? I want to dig into those numbers a little bit.
Okay, let's break them down.
Yeah.
Their net sales for fiscal year 2024,
Uh-huh.
$1,830.5 billion. Now, that's actually down slightly from the previous year,
Okay.
primarily because of a slowdown in the semiconductor market.
Right. It's been a little bit of a roller coaster.
It has. But, they've still managed to maintain that healthy operating margin of 24.9%,
Right.
which tells us they're focused on high-value products.
Yeah.
And they're running a tight ship.
So even in a tough market, they're doing pretty well.
They are.
What about their balance sheet? Any key takeaways there?
The balance sheet is strong,
That is.
reflects their stability.
Okay.
Healthy cash position,
Uh-huh.
$410.9 billion.
Wow.
Total assets coming in at $2,228.8 billion.
Okay.
Debt to equity ratio, very manageable, 0.37.
What does that mean?
It means they're not overly reliant
Okay.
on debt financing.
So they're not over-leveraged.
Well, they're not.
That's good. It gives them flexibility.
Exactly.
They make investments to weather any storms that might come along.
Absolutely.
What about cash flows? Are they generating enough cash to fund everything?
Absolutely. Cash flow from operating activities for fiscal year 2024,
Yeah.
$434.7 billion,
Strong.
which allows them to fund those significant R&D investments that we talked about earlier,
Right.
which are critical for their long-term success.
Absolutely. And what about free cash flow?
Free cash flow for fiscal year 2024,
Yeah.
solid,
Okay.
$231.9 billion.
Okay. So what are they doing with all that cash?
Well, they've got options. They can invest it back into the business.
Yeah. Right.
They can pay dividends,
Uh-huh.
buy back shares, or even just hold on to it
Yeah. As a buffer.
as a buffer for the future.
Smart.
Yeah.
So they're in a good position.
They are.
They're generating cash. They've got a solid balance sheet. They're investing in their future. It seems like they're doing everything right.
It seems that way.
But what are their specific plans to create shareholder value? We talked about dividends and share buybacks. I want to get into the specifics.
Let's do it.
Their dividend payout ratio, 45% for fiscal year 2024.
Right. We said that was a lot.
Yeah.
What does that mean for investors?
Well, that translates to a dividend of 400 per share,
Wow.
which is, a substantial return
Yeah, it is.
for investors. They've also been very actively repurchasing their own shares.
Okay, give me the numbers.
They bought back, like we said, 40 billion worth of shares last year,
Yeah.
and they have authorization to repurchase up to 100 billion
Wow.
over the next 2 years.
So this shows their commitment to returning value to shareholders, boosting the value of their stock.
So they're not just sitting on their laurels.
No.
They're actively,
You're taking a very proactive approach.
to creating shareholder value. They're paying good dividends.
Yes.
They're buying back shares.
Mm-hmm.
They're investing in the future. What does all of this mean for the business moving forward?
That is the big question, isn't it?
It is.
I think we need to explore that.
Okay.
Their long-term strategy
Yeah.
and assess their prospects
Right.
in this really rapidly changing industry.
All right, so let's wrap this deep dive up by looking forward.
Okay,
What does the future hold for Tokyo Electron?
let's do it.
So we've looked at their business, their financials. We even talked about how they're keeping their shareholders happy.
Right.
But this is other piece that's, more and more important these days.
Yeah.
Sustainability.
Sustainability, yeah. Big topic.
It's a big topic, but with Tokyo Electron, it feels like it's, more than just like a PR thing.
Oh, it's definitely not just a PR thing. It's really baked into their strategy.
Okay, so give me some examples.
Well, they've set some pretty ambitious targets, like achieving net zero emissions by 2040.
2040, that's soon.
It is soon, and they actually moved that target up from 2050.
Wow.
That's a pretty clear signal that they're serious about reducing their impact.
So they're not messing around.
No, they're not. And it's not just about their own operations either. They're
Yeah.
thinking bigger picture.
Okay, how so?
Well, they're aiming to reduce CO2 emissions per wafer
Per wafer, okay.
by 55%
Wow, that's a lot.
by 2031.
Okay.
And they're looking at the whole life cycle of their products.
The whole life cycle. Okay.
So working with suppliers, working with customers to make that whole semiconductor ecosystem more sustainable.
So they're not just cleaning up their own mess. They're trying to clean up everybody's mess.
Yeah, they're trying to lead the industry, really.
That's impressive. But do they actually walk the walk, or is this just talk?
No, they're definitely walking the walk. Lots of examples.
Okay, like what?
They're promoting sustainable procurement.
Okay,
So working with suppliers to reduce their environmental impact,
right.
focusing on safety and quality management
Yeah.
throughout their supply chain, and they're even developing those new cleaning technologies we talked about.
Right, the ones that use less water.
Less water.
Fewer chemicals.
Fewer chemicals, exactly.
Okay, so it's good for the planet. But it's got to be good for business too, right?
Of course. I mean, climate change is a huge risk for any business.
Yeah.
And Tokyo Electron is being proactive. They're mitigating those risks.
Yeah.
And, by investing in sustainability, they're making their business more resilient.
Makes sense.
And they're tapping into new markets
Right.
that are, focused on these sustainable technologies.
It's a win-win.
It's a win-win.
Okay, so we've talked about how they're doing good. Let's talk about corporate governance.
All right.
It might not be as, flashy as sustainability,
Maybe not.
but it's just as important.
Absolutely, yeah. Good corporate governance is all about transparency,
Yeah.
accountability, ethical conduct.
It's the foundation of trust.
It's the foundation of trust, and it's essential for attracting investors.
Right, and for building a sustainable business in the long term.
Exactly.
So how does Tokyo Electron measure up in this area?
Well, they've got a really robust governance structure.
Okay.
Clear separation between the board of directors
Right.
and the executive team.
Uh-huh.
And they have a number of committees
Okay.
that are in place
Yeah.
to provide oversight
Oversight.
on key areas.
Give me some examples.
Risk management, compliance, information security.
Those are important.
They're very important, yeah.
Okay, so they've got, like, a system of checks and balances.
Checks and balances, exactly.
But it's not just about the structure.
Yeah, right. It's about how you use it.
Exactly.
And they are constantly evaluating,
Okay.
improving their practices.
Okay.
They seek feedback from investors,
Right.
external experts.
So they're not just doing it in a vacuum.
No, they're not. And they're very committed to transparency.
Yeah.
They provide all the details
Okay.
about their structure and their policies in that integrated report.
Transparency is key.
It is.
So it sounds like they're doing well with sustainability,
Yeah.
good corporate governance,
Mm-hmm.
but No business is perfect,
Yeah.
right? What are some of the challenges that they face?
Well, the semiconductor industry is notoriously cyclical.
Right.
Demand for chips goes up,
Yeah.
it goes down,
Yeah.
it can impact sales,
Mm-hmm.
profitability.
Okay.
They also face increasing competition
All right.
from other manufacturers.
All around the world.
Yeah, all over the world.
So staying on top of that innovation,
It's a constant pressure.
it must be.
Yeah.
What about geopolitical risks? I mean, we've seen governments getting more involved in chips, right?
Yeah, that's a big one.
It's a big deal.
And those government actions, they can create opportunities,
Yeah.
but they can also create challenges.
For sure.
They've also got to manage, cybersecurity,
Of course.
protect their intellectual property,
Yeah.
and stay on top of all those data privacy concerns.
That's a lot.
Yeah.
It's a complex world out there.
It's a complex landscape.
It is. But it seems like they're in a good position.
Yeah.
They're financially sound.
Mm-hmm.
They're investing in innovation,
Yeah.
sustainability, good governance. It seems like they're ready to face those challenges.
I think so too. They're a company with a vision,
Yeah.
and they're taking the right steps.
To make that vision a reality.
Exactly.
So as we wrap up this deep dive into Tokyo Electron,
Yeah.
what's the one thing you want our listener to remember?
Tokyo Electron is more than just an equipment manufacturer.
Right.
They're a tech leader.
Yeah.
They're sustainability champions,
Uh-huh.
and they're a responsible corporate citizen.
They are.
They're at the forefront of an industry that's changing everything.
Yeah.
And they're doing it in a way that's both innovative
Yeah.
and sustainable.
That's a great way to sum it up. They're a company worth watching.
They are.
I'm excited to see what they do next. Thanks for joining us on this deep dive.
My pleasure.